Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode.
So in the broadest sense, we're dependent on whether flows are going to emerging markets or out. Because the way foreign investors view emerging markets is just one big basket of countries. And actually the Philippines is only 1% of that.
Call it what you want. A game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Hi everyone, welcome to episode 31 of Short Stops. It's good to be back and good time to start the year. We've seen the market move from 7,400 to as high as 8,000 plus, and this is in a span of 2 weeks. Today we're going to be talking about understanding fund flows and the movement in money. And here with me today is Zarr Pacificador and Mr. Jason Mariposa. It's good for both of you to be back once again.
Hi guys.
Hello guys.
And today's topic is all about understanding fund flows and the movement of money. So what we saw last year in 2018 was the year where so much fund flows, especially foreign fund flows, started to pull out in 2018. So when it comes to trading, how important is it, for example, to understand sentiment?
I think it's extremely important. Like what we teach in Caylum, it's all about FTSR. And if you contrast trading in 2017 and 2018, I think that says it all, right? Of how important it is to have the market on your side when you're trading.
Because a lot of people forget how important the market is, right? So people usually take into consideration, primarily usually just using charts or technical analysis, and use that as their guide for sentiment.
So of course I can't blame them, right? Because when it's a bull market, it's like sentiment doesn't matter anyway, because everything just goes up, right? It's only when the market turns that, okay, I don't know something. And I think that's the point. It's like when you don't know sentiment, you have a huge blind spot in your trading. So here in Caylum, what we teach in understanding market sentiment, it's all about first, inter-market analysis, meaning not just the Philippines, but the global financial system, not just stocks, but commodities, bonds, credit spreads, currencies, and all of that. So by analyzing all of those, you get a good picture of what's the market sentiment right now.
And maybe you can start off by talking about intermarket, because everybody always says how we're so dependent on the US. But is it just the US? What about China? What about the other countries?
So in the broadest sense, we're dependent on whether flows are going to emerging markets or out. Because the way foreign investors view emerging markets is just one big basket of countries. And actually the Philippines is only 1% of that.
My point being is that, let's say the Philippines. If you look at the Philippines, it's just a small percentage of the entire pie, like what you said, right? So when emerging markets or fund flows start to pour in, especially by foreigners, it's just a small portion to them. Kaya nangyayari, like when they deploy, it's just all at one go. Is that how it is? That's the impact?
Like for them, stock picking isn't important to them. Because it's too small for them to matter. So it's not going to have an impact on their portfolio. These guys are just passive funds buying. So it's mostly just a basket of stocks.
Okay, so it's not the stock picking, meaning they're like buying an index, a group of stocks already all together. So automatically executing everything at the same time.
Yes, and actually you might say that it's only 1% of emerging markets, but to us, because our market is very small, there's a huge impact actually. Like in 2018, actually, if you exclude block sales, 105 billion pesos went out.
That's total now for 2018.
Yes.
Of total volume, how many percent is still foreign versus local today?
More than half.
More than half of the volumes are still foreign today.
Yes.
This start of 2019, we saw a huge resurgence in net foreign buying again. Most of the rallies that happened, and if you look at the stocks that rallied, most of them were largely driven by foreign buying. So what's the view today of foreigners versus locals? And why do we see like the locals are a little bit more neutral or bearish as opposed to the fund flows that keep on coming in?
So from the local perspective, I think the most important factor that's making people hesitant about the market is we're experiencing tight liquidity in the market right now. So what do I mean? So I recently read something about bank liquidity. So a measure of that is excess deposits in the BSP. So it's as of now, it's only at 400 billion pesos.
Okay.
And 2 years ago, it was at 2.4 trillion pesos. So we're
Just on liquidity alone.
tight liquidity in the market. So that usually means that rates are going up.
And this is largely due to the build.
Yeah, that's one factor. So government spending is borrowing a lot of money.
Mm-hmm.
And the second is that the BSP increased the capital requirements of the banks. And third, loan growth is growing at 15 to 18% in the past 6-7 years from the private sector. So all of those things are creating huge demand for capital.
At what point does it become concerning to the market?
The easiest way to look at that is when rates are going up. So at least actually right now, the 10-year of the Philippines is at 6.5. It already went down from 8%, the peak of 8% last year. However, it's still like 50% higher than the 5-year average.
Or where we were before?
Yeah.
So people talk about last year like it was an overshoot on interest rates, not just in the Philippines, but even on the 10-year in the United States, where we saw it peak almost at 3.3%. And like what you said, we saw it peak at 8% for the Philippines. What kind of direction are we looking at for 2019?
I think there's huge uncertainty this year, but I'm leaning on the bababayan.
I mean, obviously, pag boba, it softens the blow on liquidity, diba? So it
Yes,
should be
yes.
better for the equity market also.
Yes, because on the local side, even if we're tight liquidity, may bala naman yung BSP eh. Meaning the bank reserve ratio is at 18%. So that's one of the highest in Asia.
And the plan of the BSP is to bring that down pa to
Yes.
13%.
So now that the dollar seems to be weakening and fund flow seems to be returning to emerging markets, I think that's going to be a bigger probability than before when the dollar was going up.
All right, fantastic. You mentioned net foreign selling last year was almost 100 plus billion. How much is that compared to the foreign inflows we saw in the last 8 years?
We haven't seen net inflows since 2013.
Okay, so from 2014 to 2018,
There's no new net money inflow. I'm sure maybe somewhere between 2013 2018 there were years that were net inflow, right? But since 2013, there was no new money that went in the Philippines.
so whatever came in also came out in the last 5 years.
Yes.
Okay. Given that outlook on the global market, maybe Zarr, you can share your viewpoint on what's happening on the individual stocks because of emerging market inflows that we're seeing today.
All right. Last year we saw because of the fund flows, so a lot of quality stocks sold off significantly. So for local investors, we've seen MBT, FGen, LTG, AGI. So all these
Something rallying.
big caps sold down significantly. While foreign fund flows went out, we saw all these values. Even though there were problems for some of these companies, we believe that it was an overreaction because
Irrational, you mean?
irrational, yeah. Like for example, like you saw this like MBT sold down to like 0.7 times book, 0.8 times price to book. You have FGen trading more than 50% below its net asset value. LTG sold down I think to 10 pesos when its NAV is like around 20 to 22.
Pero yung favorite natin eh, diba? Yung mga
Yeah,
binibentahan
yeah.
na excess eh. I mean,
Yeah.
because the foreigners are just selling everything at one go, right? This is the only time we see extreme valuations that, like what I was sharing to on Bloomberg the other day,
Yeah.
the other month. This is the first time we've seen like 2008 valuations in some issues. Like parang recession na yung valuation sa Security Bank,
Yeah.
trading at below book, right?
Yeah.
And like what you said, LTG, AGI, Metro Bank, and these are good quality names that are trading way below what their past 10 years have been averaging at.
Yeah.
So, I mean, given all of those, what would you rather be buying? Because there's still stocks that are still holding and trading at still premiums today. But obviously, the market likes them for good cause also. So what I'm talking about is like Jollibee, SM Prime, some Ayalas also, like Ayala Core and Ayala Land. Although they've gone down, they're still trading at premiums versus the market.
Yeah.
Meralco. What's your thoughts on this?
Well, even though we think that a lot of stocks have been, are cheap, some of these stocks like SM Prime, Meralco, I think they're near their fair values. And given that there's tightening liquidity, rising, rates have gone down, but they're still high, and the trend is still upwards. So we think there's still a cap to the upside for the stocks that weren't really sold down significantly. So my suggestion is to look for stocks with growth but are still cheap.
Okay.
Yeah.
Okay. What about you, Jay? Would you prefer to buy a Jollibee or some of these like severely battered stocks?
I think all of them are going to go up in the end. It's a matter of picking the best horse. And maybe it's a matter of risk versus reward. Because, all of these deep value second liners are already beaten down so much. So,
But there's also a cause for why most of these second liners were beaten down also, diba? They just, like, a lot of these stocks went down irrationally, but there's also reason as to why most of these stocks went the way it went, diba?
Yeah, but the reasons why it went down last year, this year, like for example, inflation, peso depreciation. What else?
Toyota,
Oil.
GT Cap.
Yeah, GT cap with the excise taxes.
Yes.
And
And a lot of these things is still policy driven to some extent, right? Because if it wasn't for policy, you wouldn't have inflation. If it wasn't for policy, you wouldn't have like train law and excise taxes. And so some of these other companies that have benefited from the policy, obviously done well. The ones that are affected, that's the one we see, that's the stocks that we see were like fell down 40, 50, 60%, right, over the last year.
Yeah, but like for example, inflation stabilized. Also, the pesos strengthened. Mainly because of the oil prices, they significantly went down like how many percent? 30% since it peaked last October. So you have all these factors last year, which resulted in all these stocks going down. But this year, the outlook is better. So, like I said, inflation already peaked probably, but it's still high. But surprisingly, like consumer companies remain resilient, even though despite high inflation. So this year, so the outlook is better overall. So just pick the companies that they're performing well. So these are the companies that's gonna, I think, outperform this year. Performing well and also still has a lot of upside. Because like if you talk about S&P, HDFC, yeah, sure, they're good companies, but I think upside is limited. So compared to these other names, which have significantly higher potential.
So you're going with the stock picking,
Yeah.
and Jason is saying everything's gonna go up. Okay? Fair enough. Emerging market or developed market? Emerging market got battered last year. Developed market followed suit in November, December. And so for 2019, what do you think is gonna outperform?
Well, I think emerging markets, because right now I think the difference between, valuations between emerging markets and
it's just too big.
yeah, it's the peak. I think it's max, like 10 times P for emerging markets and 18 times for developed markets.
So at one point last year, emerging markets were actually trading at 10 times PE, and the US reached a peak of 20 times PE. And
This is before it went down.
yeah, before the US markets went down, right? But of course, the US went down like almost 20% at most at one point in December. Right? However, what I think is happening, valuations have gone down, maybe 15 times PE. But the problem, I think, is that the US is slowing down, right? Because what happened last year was there was divergence, meaning everything was slowing down, and then the US was speeding up. So money flowed to the US. But now that that's not the case, I think that money is gonna flow back to emerging markets.
So you think, so your call is emerging markets also?
Yeah.
So you think money is gonna flow back into the emerging market? Because a lot of flows went back to the United States, and you don't think it's just gonna stop and not move?
Of course, that's always a possibility. you need a catalyst to make people go back, right?
Yes, exactly. So what's going to be the catalyst for 2019 for people to go back to emerging market?
So one thing is the weak dollar. So I think that's gonna force people to finally reallocate, because maybe I'm sure they're all underweight the emerging markets, right? And of course, what the people look for is growth. So if growth doesn't seem to be that bad, especially in China, that's going to be a big catalyst. And actually, in fact, what we're seeing right now is that the emerging market countries that have growth are actually outperforming the emerging markets as a whole. Like Philippines, you have Indonesia, you have Brazil, and India.
And if you look at the valuations of India and Brazil, I think it's around 18 times similar to the US. So from that, you can see the sentiment is strong with those markets. And the cheaper ones like Turkey, they have problems, but I think fund managers are going to look at these markets and see a lot of companies with cash flows and more earnings potential. Compared to the US, which for 8 years already has been the valuations have been high, and I think they see that valuations have been overpriced for the last how many years already. But with slowing growth, they're probably going to look to emerging markets for more opportunities.
And actually, if you look at the past 10 years, the US has been going up maybe for the past 10 years, right?
Mm-hmm.
But emerging markets are actually below their 2007 peak. So it's been really in a bear market for the past 10 years. So knowing that markets move in cycles, I think it's inevitable that maybe for the next 10 years it's going to be different, right?
What do you think is the biggest risk for the Philippines?
So I think the biggest risk for the Philippines is the twin deficits, really. Or the budget deficit, you have the current account deficit, right? Because what that does is that it makes your capital markets sensitive to the mood of investors here and globally, right? Because ano ba yung current account deficit, right? It means that you have more imports than exports, right? So the net flow of currency is out of the country, right? So that makes your peso a little bit vulnerable to capital outflows, right? Then pag twin deficit ka naman, it means that you're overspending. So depende sa mood ng market, they might think that you're less creditworthy, so your bonds might get sold off or something like that. So I think that's the biggest risk already.
Maybe slowing economic growth is too broad, but we need kasi you have rising rates, so you want companies to show earnings growth. So values will be driven by corporate earnings. So if you see companies showing lackluster earnings, so where are you gonna get the upside? So what's gonna drive valuations?
Yeah, in the last week alone, we've seen two companies that placed out shares. So the first one being Ayala Corp with Mitsubishi selling, and the second one with Pure Gold, Lucio Co also selling, but almost 3.8% of his outstanding shares. So the question is, why are they selling at these levels? Since we're just at 8,000 and we're barely near the peaks, and valuations for both companies actually have gone down. So what's your thoughts on both?
I think maybe that underscores how locals are really not that bullish right now.
Mm-hmm. Yeah, I think they know that maybe growth is not slow, but it's going to be just okay. And PE wise, you won't see PE expansion because of rising rates long term. So maybe they see their companies as fairly valued already.
So it's like they're building their war chest for the difficult times already, right? So as traders, should you be concerned? I mean, you guys have been bullish the entire conversation. Yet when we talk about this, we see the corporates now selling their shares. Why are the insiders selling already at these times?
I think it helps if you look at the big picture, right? Because as we said earlier in the podcast, times are changing. Before, you had so much liquidity in the market, right? So any sort of PEs could makakalusot yan eh. But now that there's a scarcity of capital, So it's going to be a different ball game. So I think we're just adjusting to a different regime right now. Now that rates are rising, liquidity is not still plenty, pero hindi yung parang dati. There's really just so much.
Yeah, I agree. Like what Jason said, it's different now. I mean, compared to like last 3-5 years. So like what we mentioned also in the Beat the Market, there's still upside, but it's already capped. So because of tightening global liquidity, financial liquidity, rising rates, etc. So there's still upside. So you just have to look for it. You're a trader or investor, and you've been studying the markets. I don't think you have to be concerned. You just have to be a better stock picker.
I mean, just to summarize everything we've discussed, we've seen how the importance of sentiment and foreign fund flows can impact like the equity market in general. And just by looking at this year alone, first 15-20 days of foreign buying, you see your stock market roar back from 7.4 to as high as 8,000 in a span of 2 weeks' time. We always highlight how you need to understand everything from a top-down approach, from understanding the markets, understanding global markets, understanding developed, emerging markets, even other asset classes and commodities. Diverting everything back into the Philippine market, we've seen how what happens outside can also affect policy, how corporates are adjusting, and even business direction for most of them going forward for the next 3 to 5 years. And we cannot stress enough that it's so important for you to understand sentiment because it affects your fundamentals, it affects your technical analysis, and even it also affects how much risk you're going to be putting into any single stock every day. So given all that, highlighting all the foreign fund flows, we're actually having a foreign guest 2 weeks from now. So stay tuned for that. And thank you guys. Have a great weekend.